Rip Van Winkle.
What's that noise? Right.
That's Daniel. That's Daniel.
Oh, it's Daniel. Wow. We had one guy not even make it. We had one guy not even make it, and then we have another one that's sleeping on the job. That's great.
Just like Royce's doctor. Mine said no more monster. So
he can't even use the excuse. You're not in a Latin American country.
But a fan.
Huge fan. Red Bull, great product.
Great product.
Not made in America. We might have to deal with that, but big.
Terrific.
No, don't do that.
Terrific.
You can't use the excuse because you're not like in Mexico. You can't say that you were doing a siesta. You can't use that excuse. You're in the Asian world. They don't have siestas there, right?
Matter of fact, Daniel, I might need you to go pick up something. Don't worry about it. We'll talk about it after the podcast.
Oh, teasing us.
Just to be clear, I watched a lot of Locked Up Abroad as a kid, so I am going to need to know what the package is first.
Of course, but I can't talk about it on the podcast.
No, fair enough. I'm just saying. That was my favorite show as a kid, but it also terrified me.
And for that reason, we are not going to reveal where he is.
So Daniel is the catcher in the rye. Just know that that's okay. If you read the book, you'll be fine. You'll be fine.
Which is better than catching it in the eye. All right, here we go. We've got this is what?
Darin is just on one today.
I'm just talking about a punch. I don't know what you guys are talking about. All right, here we go. It's this is Arbitrage Trade after the bell. My guests we only have 3 guests
this
time.
Is why we don't have apes by themselves. They self-regulate each other.
This is America. We don't believe in regulation anymore. All right. We've got
control.
Yes, that's coming soon by robots. My guests are Daniel Hopwood, who ex-institutional wealth manager. Josh is not here. Sorry.
But he's missed. He's deeply missed.
And he's not going to be here next week either, by the way. It's 2 weeks out. So, and then we have.
I'm going to win for 2 weeks. Yay!
No confidence in me. And fresh from somewhere else, an undetermined location out west, is Royce, working hard as usual. In fact, he's on the phone when he's asleep, I think. And then we have myself. Yeah, I bet. Sleep talking. And then
I was like, no.
That's right. And then I'm the dumb ape who thought he might win again, but not anywhere close this week. Of course, when we talk about this winning thing, it's all about the stocks that we pick. Let's go. I also need to say that we're not financial advisors, and this is not financial advice. Information is provided surely for educational and entertainment purposes only. And please always consult an investment professional before making any financial decisions. Let's kind of just start the show off with the facts and figures. Basically, and it's all green behind me, the Dow Jones is basically flat. S&P 500 was up 0.4%. NASDAQ was the winner, plus 0.66. And those numbers are, by the way, Dow Jones is at 46.2 because I know we like the numbers right now when it gets this high. S&P 500 is at 66.71. It loves that.
Highest it's been.
I know it loves that 67, and it keeps going a little bit above, a little below, and we're going to keep playing with 6,700 now. And then NASDAQ is 22,670. We have WTI
25,000.
Yeah. WTI crude is under 60 quite a bit now at 58.75. Gold, but does it are your pumps cheaper? Sort of, not much. Our gold.
What did Trump say? They're going to get to $2-3 oil in the U.S.
We'll see. It might. We'll see. They are pumping more right now. Gold is at 42.27. What did it reach? Did it get up to 50?
I saw it at 4,200 this morning.
Okay.
As I boarded the plane, I'm like, there you go, though. There you go.
And they're talking about 9,000 now. Some people out there, which is crazy. You got silver at 52.54, which is also very lofty. You have the 10-year at 4.03. You have Bitcoin at 111,215. Ethereum has dipped below 4,000, and you have XRP at $2.41. So there's your reset. There's your reset. Give me any more color that you have there, Daniel, before we move on.
I thought, because, when I woke up to the news, it would have been Saturday morning, and, you see
Crash.
a big painted, like almost 3% down candle on the S&P. And, you kind of read what the news was. It was about like new tariff stuff. I think, the market over the last 3 days has shown that kind of isn't going to fall for the same trick twice. We've talked about a number of times on here that technically we needed some kind of little correction, right? We finally touched the 50-day moving average for the first time in like 15, 16 weeks, which is like one of the longest runs it's had. But if you look at the technicals, whether it's, like the 50-day, you look at the arbitrage band, it really just went down, hit a strong level of support, and has since then bounced off that, right? It bounced right off the top of the arbitrage band, and is now, as futures open back up, trading above the 10-day moving average. So like, as long as it holds through like these levels of support through the end of the week, like barring extreme news event, like I don't see this really going too much further to the downside.
What I find humorous about all of this, is that it's all relative. An $18 fall in 2016, that's like a 10% move to the downside. Now it's 3%, not even 3%, right? So it's like, okay, 2%, 1%, we're good. We're fine. It doesn't hurt. So, yeah, real blood in the streets requires like a $20 to $30 move to the downside. But if it falls that far, probability is going to pick it right back up. Mm-hmm. So, hey, watch out for those really deep dives and buy as much as you can get your hands on.
There you go. Just know which sectors. We have the tariffs are back. So is that a rock group? What are you talking about, Daniel?
All right.
Yeah. So this is why everything tanked on Friday. So I'll give you like the kind of the little rundown of what happened. So, and it's constantly updating. So the China tightened their control on rare earth metals, which there's 60% of the world's mining capacity of them, but they're like 80% of the world's production of them, just for reference. And they're, we've said this before, they're not actually rare, they're just dirty to produce, and we rather not do that in America, so that's what we call them. So they tightened control on rare earth metals. We said we were going to impose fees on Chinese vessels coming into US ports. They said they're going to do the same thing. And then Trump was not happy about that. So he imposed a new 100% tariff on them, which goes into place November 1st, which is coincidentally the day after they meet together to supposedly have like negotiations. So coincidentally. Yes, coincidentally. So South things Korea, have progressed further from there, saying Trump wants to stop buying cooking oil from them because they haven't bought any of our soybean production at all this year, which has like really hurt our farmers. And so the interesting part is that, at least on the news this time, obviously we just talked about it, like the market does not care, right? They're like, taco trade, Trump always chickens out, right? He does all this stuff purely for posturing. But I do think it's interesting to do the thought experiment of what if he doesn't get kind of what he wants coming out of that meeting with Xi, right? Because I think that would be the first real sign that, this is now no longer posturing and it is a true trade war, right? Because I think everyone anticipates, we'll come out of this, like the rare earth thing will go away because, Xi needs to have bargaining chips as well. So, right, the speculation is that this is all just him creating the same thing. And then really in the end of the month, we're just going to go back to how we were, 4 days ago before any of this happened. But if everyone gets a little too antsy, wants to bargain a little too hard, like what does that actually do? Because then we go from this K-shaped recovery of like underlying economy is maybe a little shaky, but like, as far as the stock market goes, there's no real reason to sell. It's like, could that be the forward-looking catalyst of, oh, maybe it's not going to be this soft landing that, we're kind of pricing in right now.
Oh, no, they've converted you, Daniel. You're now a bear.
No. So I'll say I am cautiously bullish, but I'm positioned fully bullish. I have no bear speculation trade-off, right? Like I'm fully invested. So
Yep. It's gonna be beautiful. It's gonna be huge.
I mean, I saw before we got on, Paul Tudor Jones. We talked about him before. One of the best traders of all time. Is like fully bullish on the market. Like fund is fully invested in, and like sees like the S&P just like ripping over the next few years. So take that for what it's worth.
Right. It's not causality. It's just correlation.
They waver back and forth depending on what's about to happen. So we've talked about that before. So let's talk about the crack in the system next. That's a good segue, and that is that certain things are starting to pop on the underbelly, if you will, and explain that one, because First Brands basically was the first, what people have been calling, and these are bank people calling it the cockroach. And the reason they say cockroach is because where there's one, there's probably a lot more. And the First Brands thing was a private equity shadow bank type thing that a lot of the big guys got exposed to, like Jeffries. And so that gives the question of where there's one, who's next? So talk about that, Daniel.
Yeah, so we talked about last week how, excuse me, private equity. There are more private equity funds than there are McDonald's, and with private equity comes private credit, right? That's become one of the more ballooning industries, and a lot of private credit is just private lending to businesses that maybe are a bit more risky to get a better yield. And with that, First Brands was a mid-size maker of automotive parts, and they recently went through $1 billion meltdown. And which companies happen and what it happens, but the issue is that they were almost completely financed by $10 billion of private credit, and 2.3 billion of those assets are now unaccounted for due to double lending speculation. Right? It's under investigation. They don't entirely know. And Jeffries, one of the big investment banks, had almost 1/10 of the exposure to that debt that now will go to zero. Now the number isn't terribly big, right? It's $10 billion of debt exposure. Like I know that sounds ridiculous, but like it's like all things considered, it's like not that big. Where the issue is that this is not the only company that is happening to, right? So there's another company called Tricolor, which was a subprime auto lender, just being frank, mostly to potentially illegal immigrants. Hence the name Tricolor was a representation of the Mexican flag. And when you start deporting all of their customers, those loans aren't getting repaid. They're not getting new loans out. And JP Morgan and one of the other big banks also has exposure to them, but the losses are currently unknown. So there's this big kind of, private credit, private equity, play that is starting to show cracks. And I don't want to say the banks are trying to cover it up, but seems to be a bit of a scramble of what exactly is the exposure level and how far and deep are these cracks coming. And so I think this is where Darin comes in and tells us it's the entire system is on a fault line and gonna crack under. LA is gonna go in the San Andreas fault and cease to exist soon, and we'll all trade in gold coins.
No, because here's what happened is the banks just did their earnings, right? And everything was just peachy. Everything was great. Everything was super. It was you have all
JP Morgan's trading desk, like all-time revenue for like the quarter,
exactly.
I believe.
Exactly. Yeah. There was a lot of, even Wells Fargo, which we always make fun of on earnings, they had a good one. So it's and a lot of it they said was because of their investment banking. So it is about the stock market. It's because of how high the stock market has gone up. And so that's what's kind of buffered the bad deals possibly that are out there. Plus you have now everybody starting to buy everybody else. It's like if a company's going bad, then they're going to be bought by someone else, take them in and absorb it. And then they're going to make even more. So it's do I think there could be a big crack at some point? We don't know, because by design, a lot of stuff's going private. So we don't know. Things happen in the dark. They're going to stay in the dark. They're not going to be regulated.
If it's private, how does it influence the market? If it's private, it doesn't.
It's only going to affect credit availability if something blows up. That's the only thing.
I think it still does affect the market in the sense that, like, even if the company's private, if like a public bank has exposure to it,
that's what I'm talking about.
Belly up, it still affects the market.
Yeah, but they don't have to say anything about it.
Sure, they do. Won't. Reports on their books.
Remember, you only have a loss if you if you take it. So if it's doing poorly, you just don't talk about it.
Swaps.
That's fair.
Yeah. So and no one's making them bring it out. So I'm like, okay, people are going private to basically avoid, in my opinion, the blowback of we possibly are in a recession.
That's what I've been saying. Yes.
But in that same breath, it's like, okay, if they're trying to intentionally do that, are we wanting to see blood in the streets? Do we want the market to fall, or do we want to basically say, okay, it's rough, stop reporting, let's get our stuff together, and then come back out swinging?
Well, plus you talked about the insurance companies and how they are basically insuring against this stuff, I assume, because these big banks wouldn't. I think you called it a wrapper, right? Or
an
somehow they're
wrap or a trade trade credit insurance. Yeah,
sure. So I think you're going to have a point where they are getting so many claims that might be where it starts.
Well, you only get claims if someone defaults. If no one defaults, right. You borrow the money, you do what you need to do, you pay like you're supposed to, the receivables are assigned, life goes on.
There's some signs of because I was asked about the cracks. There's some signs in the repo facility right now that harken to another time when it was bad. So it's just certain things that are lining up, but we just don't know.
Are you looking for cracks? Are you looking for cracks?
I'm not. It's just I watch a lot of different things.
Yes.
I watch a lot of different things.
I want to see cracks.
I'll just invite a plumber
Give me
over.
Cracks. It will, you won't find an Achilles heel if there's no Achilles heel. There's no Achilles heel, man. There's no Achilles heel. Let the people run. Let the market run.
Let the boys play, Darin.
No heel or Achilles crack. Gotcha. Let's go into this whole crypto event that happened. I mean, it would have made sense earlier, especially talking about one thing affecting the other, because it's money that gets passes back and forth. I had it written down as something to talk about today, and it was part of that's even before I read the agenda. So we're on the same page here, almost quite literally. And that was last Friday when 19 billion or 20 billion round up was liquidated on Friday in crypto.
Was it liquidated or repurchased as soon as it was liquidated?
Well, I mean, obviously it started to come back up again.
Well, it's right back at the levels it was before the fall. So the only thing it did was expand probability. So
right.
So was that money lost or was that money gained? It just changed who had it.
Yeah. Oh, well, that's what stock market and trading is. But
Yeah, a lot of people lost a lot of money because apparently it was like one of the biggest leverage liquidations in crypto. So
right.
Someone made money, and that's the if you looked into it, the perfectly timed whale short.
Yeah, it was a narrow amount that made the money. All the way down.
It was a perfectly timed short within 5 minutes of the big crash.
I saw it.
It was Liquid Whale or Whale Liquid. Was it Whale Liquid or Liquid Whale or something like that? The name of the user, because they knew the wallet when all that happened, where some guy made out with $200 million, and it was well timed. Yeah, that's what it was. And then there was a in the actual stock market, 1.65 trillion was lost. But of course, we've got it again. It's a transfer to someone else.
Yeah, it went to someone else. So
and then you transfer it back, and then everybody's hunky dory, and then the retail gets squeezed out.
But why didn't retail participate? That's the big question.
Because they aren't part of the conversations when it's in
no.
The
I mean, everyone's
this is what we're going to do.
Everyone's seeing it fall. Is retail basically being skittish about getting back in?
Well,
like if you see it falling, no one wants to catch a knife. So it's retail's going, XRP's at 175. Don't do that.
They don't have the indicator,
like,
Royce.
XRP's at 175. Buy all of it.
It's because it's happened before, and then it bounces back up again and goes higher. That's what everybody's feeding off of. And
so that means as long as you have buyers down here, it'll prop it up and allow it to keep going up.
Right.
And the people that sold for a loss, they're kicking themselves and buying it back.
True. So what anything else on that, Danielle?
I was going to ask Royce what this means for the forward-looking projection of crypto. We can say Bitcoin, just use that as a proxy.
So I think that we're about to see a record rise in crypto over the next 3 to 5, maybe even 7 weeks. So the normal October rise leads into November going into Thanksgiving. But I think by the time we get to Thanksgiving, Christmas, we're going to be like, what in the world?
So do you think that'll be cycle top?
Typically, it makes the opposite move of where it wants to go. So the fact that I'm going to basically akin it to the 2016 election. Everyone said that Trump will crash the market. They exonerated Hillary of basically FBI stuff, and that weekend it tanked. But as soon as the election was over, that tanking allowed for 3 straight months of up. So the fact that we had this Friday, yeah, it's going to be a very good new year.
Well, the whispers are 140.
So do you think that'll be the the cycle top in crypto?
We're nowhere near the top. I'm expecting Bitcoin to make it maybe 140, 150. XRP make it 15 to 20, 25, maybe if we're lucky. Crow actually make it over 50 cents. I'm expecting a lot because of how steep and how big the probability spike or adjustment was when it went down and then decided to come back up. Because basically all that momentum doesn't get absorbed. And so because it doesn't get absorbed, it allows probability to expand wider on the tails. And if it's wider on the tails, that means it can technically reach it.
Volatility. Let's do it.
We love volatility. The more volatility, the better. Who doesn't like the VIX? Come on.
Make money both ways, man. All right.
Let's both ways. Just time it. Wait for it. Wait for the market to get exhausted, and then you play.
Or just have indicators at your fingertips. That works too.
Wait for it to be exhausted. Yes.
Exactly.
And alerts. So like literally one of the people that works here in one of my DBAs, I won't name any names on the show. He's like, hey, are you in XRP? I'm like, I just got the alert. Are you buying? I'm like, yes, absolutely. I'm buying.
Gotcha. Yep. So I think I hear them sometimes.
Our system, the strength of our system is that we can set alerts. If you don't set alerts, shame on you.
Yep. True. It is worth your time to set those alerts. We, especially if you can rely on your indicators, which we can. So let's move on to the crayons and charts with Royce Wells after the bell.
So what
Now,
are we
you
doing?
ready? Are you
Sure.
ready?
Let's go take a look at. I'm going to look at.
This looks very familiar, Royce.
Oh yeah, it looks like the what one last week, and I'm trying to figure out if I want to use it again. Actually, I think I know what I'm going to do. I'm not going to use it again. I'm going to use it in crayons. I can do that.
Okay.
Let's go back down to the daily time frame where we got some data and see what we're seeing. So this is where we were about last week, and everyone's like, okay, we're about to go down right here. But little did we know that it would go up, come down a little bit, go even higher, and it's basically been riding the edge of probability. The question is, can it continue this ride, or will something make it fall? I mean, even Infinity Band is saying, what are you doing? You are way out of probability. Like on a scale of 1 to 100, you're at 235. Who does that? So should it be up here? Will it stay up here? Hey, who knows? But we do. Let's go down to the 4-hour chart. Looking at the 4-hour chart, we're near a high. It could technically even make it all the way up to $69 per share. But from where we are currently, still, once again, still out of probability. So I'm just going to keep drilling down to where probability says, you know what, I'm going to listen this time. So looking at this guy on the 1-hour time frame, I am expecting it to be a little bit bumpy for the next 3 or 4 days. And from here, I am expecting it to potentially get as low as about $36. So that's a $20 haircut. Who wants to see a $20 haircut?
Wow.
If, however, probability holds, and it so far it has, because it got up here and it decided to get narrow. It getting narrow means if it's actually going to move up anymore, we have to have it move down, and that move down will be maybe about 51, so about a 10% move to the downside. But if it does do that, then it has the potential to get up to that $69 valuation. So if it were me and I were trying to figure out if I wanted to get RGTI again, I'd try to probably get it at about $50 a share, just to be on the safe side, make sure I'm not, catching a knife. Weekly time frame, yeah, it's definitely extended, but it's more or less maintaining its course and pace. The only problem is Z-Pro is saying, yeah, we should be firing, saying we have to come back in. That's not the case yet. And the funny thing is the arbitrage band is saying, hey, you're out of probability. What are you doing out here? So anything past 42 is out of scope. So once again, there is going to be a day of reckoning, but will that be immediately today or next week? Who knows? Back to you guys.
All right. That is After the Bell, Crayons and Charts with Royce Wells and Pips, showing us what the probabilities are. Let's come back to here real quick. Now, do you have it's a double thing here, double whammy. Royce won last week, so I'm going to bring up the scoreboard. Here it is. Royce is now back into second place. It is Josh at the top with 4, Royce with 2. I have 1, and Danielle is working on it. He will. Oh, don't say it. Okay. Say
Nothing from nothing leaves nothing.
So it is 5-2 in the overall scores between the teams.
Of course it is. Of course it
is. But a lot of the season is left. This football season goes a long way. So what are you choosing for us this week, since it is not RGTI?
It is not RGTI. I am going to do something evil and sinister. I'm going to go back to guards.
You like doing that.
I do like doing that. So
where's your evil laugh? Where's your evil laugh?
I'll leave that for Emerson.
There you go.
Let's go look at L3. They had a rough day today. They lost about 3%. But the question is, where will they go from here? Up, down, left, right? Let's get that dashboard to come up in paint, shall we? Come on, it's holding out on us. There we go. All right. This guy is all over the place, but from where we are, I'm going to be an evil, evil man. Ready? Darin, you get to go first.
I knew you were going to do that. You still have to give me channels.
I will give you channels, but they're wide, extremely wide.
You got
give them
to divide it by 4.
There's about a $20 channel from about
Okay.
300. Actually, no, I'm sorry, $40 channel. So basically, each person gets about $10. So from, let's say, from where we are, let's say the top of the channel, 310 to 300 to 390. I mean, 290 to 280. $10 each. Where do you want to fall?
Okay. The top end, though, it tops at 310.
Top end is 310. Correct.
So 310 and up, and then 300 to 310,
Mm-hmm.
and then 290 to 300, and then
280
and below.
Yep.
Hold on.
So we're in the bottom edge of the channel. Are you feeling lucky, punk? Well, are you?
310 and up, 310, 290 to 310. Oh, yeah, okay. I'm still doing it on my little book here. All right. I'm going to say, it's extended back above that.
Don't hurt yourself.
I am. Thank goodness this is where my face isn't on the screen. Only the chart is, which just makes it good.
There is that.
Yeah. So man, it looks like it could go either way.
That's the point. That's why we do this every week.
Man. Yeah, but this one really looks like it could go either way.
If you want, I'll go down to the 1 minute chart to give you a little bit of an extra look.
For 2 seconds?
No, not for 2 seconds. I'll show you where it's at so you can make your decision. Because remember, it's only 8 cents into the next channel.
What do you mean?
So if it's 280 to 290, it's only 8 cents after market hours. It's in the second lowest channel. So it means the sky's the limit. You go from 290 all the way to 300 if you wanted that range. Do a Josh move, or you can try to go under and be perma bear, or you can try to hang out at 310ish, or even at 300.
No, I mean I feel like it's going to go up. So
okay,
it's just which channel up.
Ooh, ha, ha, ha.
The range was 310 down to 270. Is that what
280.
280. You know what? I'm gonna do I'm gonna do 290 to 300.
Okay. Sounds like a plan. So that means we have to go through you to get to the top. All right, Daniel, go ahead.
So you took 290 to 300?
Yeah.
That's unfortunate because that's what I wanted.
Statistically, yeah, that was the safest one.
Yeah. No, I'll go below.
Okay, excellent. All right. In that case, I'm taking the one directly above Mr. Darin and do that.
God damn it.
300 to 310.
And then it's
310 and above should be that guy.
Yeah.
Josh.
310 plus. All right. We are we're spread out every other one.
Every other one. Isn't that nice?
It might be the first time. Yeah.
Right.
That's...
And all I had to do was be first to make it fair. Oh.
All right, guys, let's wrap this sucker up. Royce has more deals to make.
No, I don't. I'm done making deals. All my deals are done for the year. If I stopped right here, I'd be okay.
It'd still be great. Yes, absolutely.
But you won't.
Are you sure?
Well, I don't know. Maybe
Yeah,
like,
he's a deal making machine. All right, let's get out of here. Tell everybody goodbye, and we will see you guys next week on After the Bell.
Say goodnight, Gracie.
Yay. Good night, Gracie.
good night, Gracie.
Bye.